look at macro trends, what's your sense of the Indian stock markets at this moment? There is one perspective that the markets are overheated, that the price earning multiples are out of whack when looked at what's happening globally, and that India could be headed towards a correction. It could be a minor correction, major correction, that's up for debate, but that we're in overheated territory. The other is, look at this in a global context, that India is still the fastest growing large economy, and therefore, if you zoom out, there is still enough juice in the Indian story, and the BSE could be headed to 100,000 and the NSE could be headed to 25,000. What's your take on that?
Right. So I'd say that, the classic, what happens when we look at markets and stuff is that we all have classic models of ours. The classic models aren't working for India just now.
Why not?
Because of the fact that this domestic flow of money, this financialization trend that we are seeing has taken a momentum of its own, right? Because India has been the most expensive stock market in the world now for a while. It's the one market in the world today which is even more expensive than the United States in terms of valuations, despite the US market being at record highs and stuff. So this is a market which is functioning on its own dynamic. The good thing is that it's so far been broadly supported, at least by fundamentals. A true bubble is one where the fundamentals are deteriorating, but the prices are going up. In India's case, there has been earnings growth in the stock market. So it's been backed up by earnings growth. There has been this wealth creation that's taken place on a genuine basis as well, as far as India is concerned. The economy is doing relatively well. It's not like a China type 9-10% economic growth, but it's doing relatively well today in terms of, if you look at around the world, what our growth rates are, stuff. As I said, the macroeconomic management has been decent. And the good thing about India is that there is no other emerging market in the world which offers a diversity of companies that India offers. I mean, if you look at other markets, let's say the other markets which are doing well, something like a Taiwan, or a Korea, it's one sector, technology out there. You go to a country like Brazil, it's so dominated, by commodities. Some other market is dominated by a couple of banks and stuff. In India's case, the diversity that we have out here and the depth that we have in this is unprecedented. So there's a lot to be done. So in India, I'd say, and there's one good news I'll say, which India can still look forward to, that this entire boom has been driven by domestic money so far. Foreign money has been largely absent from the stock market boom until the election. Now, across the world, the big trend that I've noticed is that people are overly concentrated in the US stock market today. The US economy today is about 26% of the global economy. The US stock market today is more than 50% of the global stock market value. And according to the MSCI indices, it's close to 70%. So 50 to 70% of your capital is allocated to America. And that has gone up dramatically over the last 10 to 15 years. I think that that's bound to break. The dollar is bound to weaken, and the capital flows are likely to come back to emerging markets, and India will be a beneficiary of that de facto. Now, I feel that other emerging markets are even cheaper and maybe bigger beneficiaries, but India will be a beneficiary. So yes, I'm concerned by this domestic one-way trade which we have had on this market.
Is that a good thing or a bad thing? Why? Because a lot of small retail investors, because they've seen the returns of the stock markets for several years, through the systematic investment plan route, are investing in domestic mutual funds.
Yes.
It can be argued that they have no other immediate alternatives. This is the only route they have. So even if the fundamentals don't support it, this is where your local asset management companies are pumping in the money, because they have frankly nowhere else to go. I mean, the options to invest internationally for domestic retail investors are far fewer.
Well, some options are opening up. I would recommend to people that wherever possible, do diversify a bit, especially into other emerging markets, because they are much cheaper and they have decent growth prospects and they're improving. But in India's case as well, as I said, that I would begin to be much more concerned about the Indian stock market if our earnings growth began to decline, if in terms of the fact that our fundamentals began to decline, I'd be much more concerned about that.